It's April, so good to see you. Thank you
See
so
you,
much.
Kathy,
Please have a seat. You know, it's been such a tough market, and tough to watch there at the start of the year since January. I know that you've been focusing on the dividend yield plays. How come?
Well, for investors, it's hard because, as you've said, the market has been volatile. For January, it's down. But if you look at the individual stocks, like, I'm looking at the valuations and they're really cheap. But my issue is I don't know when they're going to recover. But if I can view stocks as a proxy to, say, fixed income, if they provide enough passive income for me to be like a long-term bond that I can hold on for, say, 10 years. Of course, I'm not saying that it'll take 10 years.
But why not bonds then? I mean, that would be such a perfect opportunity if you didn't want a proxy. Just go for the bond market. Go for the 10-year yield.
Well, yeah, that one has a fixed return. But then you think about it, the reason why you want to buy stocks now is precisely what Warren Buffett said. Buy when there's blood on the streets, and then, you buy when everybody doesn't want it. And because the market is so cheap. And that's an undisputed fact. Like, nobody will tell you the market is expensive. And we know that, this is really an opportunity because you have a lot of the blue chips. The stocks that maybe, during the boom times you would say, I wish I could have bought them a lot cheaper, but now they are so cheap. So they really are an opportunity, and you know that they're still going to be there.
Right.
After 10 years, you're going to buy their bonds for sure.
Blood in the streets, that kind of stuck because right now it's a midterm election year. And the previous election years, and I've shown the chart there, 2019, 2007, 2013. They're all up markets, but now it's down. So what gives? I mean, what makes that difference then? That the market's been falling, it's a midterm election year, and the voting happens in May.
Yeah. I think, it all starts, we can't start with January, but we have to start with November. I think before that, the market went up because of the Fed pivot, in anticipation of the Fed pivot. And, everybody knows the story. They know that the BSP is going to cut rates and inflation is going to go down. So everybody was excited. Unfortunately, we know that the Fed pivoted the other way. They became more hawkish instead of, cutting like people were anticipating. And I think, the main catalyst in November was the election of Trump, which, people were really worried about because he had all these pro-growth policies that, people were worried would lead to higher inflation, higher interest rates, and a strong dollar, which, of course, the Philippine market isn't, gonna like.
Right. You said the Fed pivoted. So did the Bangko Sentral. We haven't got to that yet. I've got Jun Neri joining us right now. He's the lead economist of BPI. Jun, so good to see you. I know that you predicted 40% that they wouldn't make a move, 60% that they would. They didn't cut rates. What's your thinking right now? Now that you've heard from the Bangko Sentral, and you know that the Bangko Sentral is going to cut the reserve requirement even before April 3rd. What's your thinking now? Where are we headed next?
Yeah, Kathy, good morning to you and April. Congratulations to your new show.
Thank you.
Yeah, the triple R cut is a sign that maybe the BSP is still willing to ease. They would like to see stronger performance on the part of the economy. Our neighbors are doing very well, like Vietnam grew by more than 7%. Of course, we want to aspire for something like that as well, Kathy. That's why the BSP is trying to be supportive. But of course, it has to keep its eyes on the ball, no? Which is inflation. Inflation is very uncertain nowadays. Again, as April mentioned earlier, the leadership of Mr. Trump not only threatens to increase tariffs, but even intensify deportation. No? And these two factors can actually be very serious source of uncertainty as far as inflation is concerned, because deportation can cause more tightness in the U.S. labor market, which will be bad news for other currencies, as the dollar would probably continue to strengthen if this really happens.
Well, that to me seems that it's got the Bangko Central's hands tied. If inflation is going to be a concern, the central bank can only do so much, June. So how close are we to neutral, and how do we position from here?
Yeah, so our view on that is we're very close to neutral already, Kathy, since our inflation rate tends to settle at 3%. It would probably see the bottom. The policy rate will probably see the bottom at that 5%. So that's why we're only pricing in two cuts for the BSP this year, assuming they are able to cut at all. No? But clearly, the space for reductions in rate cuts appears to be very uncertain, especially this year.
Assuming
So,
that they can cut, but they did guide, the governor did guide on a cut in the reserve requirement ratio, which brings us to the 330 billion pesos that would infuse into the banking system. What impact might that have on the asset classes that we've talked about, April, stocks, bonds, currencies?
I mean, of course, that's good because that's also easing. So, more liquidity means, good news for the stock market. And hopefully that would encourage banks to be more aggressive in lending and to help the economy grow faster, which in turn would help stock market go up.
Would it help, June? We were talking about the midterm elections. Could that be a factor in possibly, helping with spending? It is inflationary, isn't it? I mean, when we're in an election year, when a lot of spending does happen, at
yes,
least on the consumption
well,
side.
the positives, yes, the positive side is growth will probably benefit from it, as the politicians will be spending it domestically so that they'll have a bigger chance of winning their respective mandates. So we're not too worried about that causing inflationary pressures at this point. As it typically it scores through imports. Now, if we are led to import more and that causes the currency to weaken, then that could be inflationary. But so far, hopefully, the spending will remain domestic, and that will fuel, hopefully, a recovery in the household consumption, which has been slowing down. Notably, Kathy, that's why a lot of analysts, my counterparts, are asking the BSP to be more aggressive with the rate cuts. No?
But when you come to look at the peso, it's been stronger. It's stronger against the U.S. dollar, especially after the pause on the Banco Central. On balance, what impact do you think that would have on the economy? On the one hand, it could be a boon for the corporates with those with huge dollar-denominated debts and those dividend plays, in fact. While on the other, it could presumably be a bane for the local exporters, June.
That's right. That's why some kind of balancing act has to be carried out as well on the currency, Kathy. In fact, there is the risk that the peso can strengthen significantly this year. I mean, that is not our central scenario, but if Mr. Trump is successful in ending the Middle East tensions, no, if he's successful in his drill approach to oil production in the U.S., that could significantly lower the price of oil, the global benchmarks, and that will save the Philippines a lot of dollars. And that's why we cannot rule out the possibility of a stronger peso this year. No?
But we can't also rule
Again,
out the
that's not our central
possibility
scenario.
of, reciprocal tariffs. I'm still right there on the impact of reciprocal tariffs. Nomura did say that it could have an impact on us in the ASEAN, and it could be huge. We've got 2.7%, thereabouts, of exports going to the U.S. How are you reading the markets with the way Trump is going with his rhetoric, and how do we position and actually hedge, April?
Yeah, I mean, as far as tariffs are concerned, I think we're not the main priority because although we are a net exporter to the U.S., as a share of total exports or imports that they get from around the world, we account for less than 1%. So, of course, they'll be prioritizing on the big exporters where, they'll get the wins there first before they look at us. I mean, in ASEAN, we have Vietnam first, probably then Thailand, before they even think about, Indonesia and ourselves. So I think we'll be the last priority.
So what does that make of us as an ASEAN market to invest in then? Does that make us a little more attractive? Do we even, can
Yes,
we even
yes.
consider that?
I mean, I think we are more attractive because we're not a net exporting, we're in fact a net importing country. We are a domestically driven economy, which in a way makes us more resilient to possible trade wars. So yeah, I mean, we're not that worried about it. It should, of course, it's more like the idea is scary, but if you look at the numbers, it really isn't that scary.
Okay, well, we have about 2 minutes. Your place, dividend place, is it really just stocks that you're recommending folks to invest in or keep a little bit in cash and maybe even bonds?
Yeah. I think cash would be good given that interest rates are quite high. So, that would be a good place to park your money. And also because one of the things that we talk about is the potential for the US market to go down. Not so much because, we're that bearish, but there are a lot of risks going on. For example, the market in the US is very expensive, trading at the, top end of the range because of the AI boom and everything. And then, of course, the very positive view on what Trump can do. But then, like right now, they're talking about possible disruptions caused by, the tariffs and, the dodge, like leading to spending cuts in the government. So, economic growth could disappoint in the short term. So short-term pain, long-term gain. Of course, the economy won't do well, then maybe earnings won't be as strong, and that would send the market down. So what happens then? They're probably, unfortunately, we've never escaped from a contagion. And we want to be prepared if ever that happens. After all, if you keep your money in cash, you still earn some yield. So it is an opportunity.
Jun, keep in cash even as you've flagged the risk of potential inflation down the road?
Yeah, of course. Doesn't matter what denomination. I think most rates today are attractive and will allow you to enjoy a sweet yield, as some of my colleagues would call it. No, and we have to be watchful of potential risks, Kathy. But so far it looks like fixed income is a good option at this point.
Would that be the 10-year?
Well, it depends on your appetite. If you're like me, I'm not young anymore. I have to be a little bit more cautious and hold on to maybe medium part of the curve to the shorter part of the curve. No?
Got it. So nice to see the differing views there. We've got bonds, cash, and stocks, and analysis from both ends. Thank you so much. Jun Neri of BPI joining us on Zoom, and April Lee Tan of COL Financial. Appreciate you coming over, and good to see you again.
Yeah,
Thanks,
you,
April.